Okay, we're going to finish up chapter 2 with a couple of problems out of the back of the chapter. So the first one is problem 2-1A. In here, Maria Canus, an architect, organized Canus Architects on January 1, 2014. During the month of January, she completed the following transactions. So I once again have the problem copied into an Excel spreadsheet that I will post under the new recordings folder in chapter 2. And then I have a sheet set up with both a ledger page to record the debit and credit, and I also have T accounts set up for all of the accounts. So let's get started. So the first transaction, transaction 1, is a issued common stock in exchange for $30,000. So the debit here is to cash and the credit is to common stock. And the amounts in each case is $30,000. Transaction 2, oh, actually this is A, and this is B. So transaction B, paid January rent for office and workroom, $2,500. So this is rent expense, and we paid it in cash, $2,500. C, purchased a used automobile for $28,500. We paid $6,000 in cash, and we gave a note payable for the remainder. So the remainder being $22,500. D, purchased office and computer equipment, so equipment, on account for $8,000. So $8,000 in equipment, an asset, and $8,000 in a liability for accounts payable. E, paid cash for supplies. We paid cash for $2,100. F, paid cash for annual annual insurance policies. So this is prepaid insurance, and we paid cash. And the insurance was $3,600. G, received cash from clients for plans delivered, $9,000. So that's a debit to cash and professional fees. And the amount of the revenue that we earned was $9,000. H, paid cash for miscellaneous expense. And we paid cash in the amount of $2,600. I, Paid cash to creditors on account. So the only account that we had outstanding was the equipment that we bought earlier, and now we're going to pay a partial payment on that in the amount of $4,000. So half of what we paid, what we purchased in equipment. J, paid the installment due on note payable. So we're going to reduce the liability for note payable, and we're reducing it by paying cash in the amount of $1,875. Okay, received an invoice for blueprint services due in February, $5,500. So that's blueprint expense. And it's accounts payable. $5,500. L, recorded fees earned on plans delivered, payment to be received in February, $31,400. So this is accounts receivable. And once again, professional fees. And that is $31,400. $31,400. M, paid salaries. Paid it in cash, $6,000. And then lastly, N, paid oil, gas, and repairs on automotive for January, $1,300. $1,300. If we sum up our ledger page, we get $136,375 worth of debits and the same amount in credits. So our ledger balances for the month of January. So now what we're going to do is we're going to post the various transactions. So the first one was a debit to cash and a credit to common stock. And we're just putting posting reference numbers in here to tell us where the transactions come from. So B is rent expense. And the credit is to cash. C is to automobile. The credit, there are two credits. One to cash and the balance to notes payable. My autocorrect put a CR in there thinking it was a credit. All right, D is a debit to equipment. For the $8,000, and accounts payable for the on account. Then supplies is E. And we paid cash for that. F is prepaid insurance. And we paid cash for that. G is the professional fees that we were paid in cash by our customers. So G. H is the miscellaneous expense. And we paid cash for that. I is the down payment on the partial payment on the equipment that we bought on account, and we paid cash for that. J is the installment payment on the note payable. And cash. Blueprint expense is K. And that was an invoice that we will pay in February, so that goes to accounts payable. Accounts receivable is L. And professional fees. Salaries expense is M. And that is a cash payment for salaries. And lastly, automobile expense is N. And that is also cash. So you'll notice that each and every instance, I started with the debit. I posted the debit first, and then I posted the credit. So now we can get a total for all of this. So the total for the credits and the total for the debits, and then we get a balance of the debit minus the credit, and the balance for the end of January in cash is $9,025. Accounts payable. Balance for that is $9,500. And the note payable balance is $20,625. And then lastly, the professional fees has a balance of clean that up a little bit. And everything else just has a single item. So there it is. And from this, you could go out and, start with the professional fees, subtract the salaries, the blueprint, the rent, the automotive, and miscellaneous, come up with net income. There were no dividends paid, so retained earnings is going to be whatever net income is. And then you have assets of cash, accounts receivable, supplies, prepaid insurance, equipment and automobiles, two liabilities of notes payable with $9,500 balance and notes payable of $30,625, and then common stock and stockholders' equity along with the retained earnings would balance out the balance sheet. So that is problem 2-1A. Next I'll do 2-2A.